Good morning and welcome to the daily market update from FP Markets, coming to you from a sunny, hot Sydney. Unfortunately, one thing's not hot are the local stock markets, and unfortunately for all of us, and certainly approaching Christmas, the Omicron variant is starting to really affect markets as well as affecting many different countries around the world. We've seen stock markets fall as numbers of infections have increased and hospitalizations are starting to go up. So sadly, we're starting to see some lockdowns coming through as well. The Netherlands went into lockdown yesterday, so Europe looking in a little bit of trouble, obviously in the middle of winter. Affecting us here in Australia as well. And as you can see here, the ASX finished sort of like 0.1% down, but some bigger numbers in the red, as you can see across the rest of the Asian market, and we're expecting more of the same in Europe, and maybe even a little bit, a touch more. As I said, it seems to be more extreme over in Europe, so the bourses over there could be under a lot of pressure. We're seeing sort of the dollar continuing to rise on the FX fronts, and I'll cut through those in a minute, but just having a look, week up to Christmas, not too much expected in terms of first tier data, and in fact much data across the globe. We sort of got that raft of central bank action, and inflation's still a concern for most central banks, and I suppose hawkishness, especially from the Fed, has maybe just caught the market a little bit off guard last week, and it's probably being felt in some of these moves that we're seeing today across markets. I think we've got those looking for a bit of a quiet week into the Christmas period are probably going to be a bit disappointed because of those sort of factors. I think because of what we've got with COVID still very prevalent and spreading sort of unfortunately like wildfire at the moment, and that sort of impact that we've got from various central banks across the world. It feels like we're going to have a bit of a volatile week, so traders will remain at their desks and on their toes for the week ahead. So just looking through some of the data releases, it is very quiet. So I think it is going to be those news headlines that really start kicking things in. Over in Australia tomorrow, we've got the monetary policy meeting minutes. So expecting, and they're probably the one central bank that is still a little bit moribund. It'll probably be fairly dull on those minutes, but keep an eye on it in case there just does seem to be a little bit more hawkishness coming out of the RBA, although that's not expected. The rest of the week, pretty much tier 2 stuff until Friday when the GDP numbers come out of Canada, and we get that core PCE index Christmas Eve in the US. That could spark things up because obviously it is a data piece that we know the Fed use. So really for this week, keep an eye on those numbers. Keep an eye on what's going on, and unfortunately it does seem sentiment's off a bit. Things can change very quickly in the market, as you know. Right, skipping over to foreign exchange, so not surprisingly the Aussie sort of like drifting back lower after hitting those highs last week, north of 72. Still I feel in sort of this downtrend coming through looking at the dailies, but bounced nicely off those previous lows, sub 70 cents. Keep an eye on that. We will get that trade will continue in the Aussie and the Aussie yen on risk sentiment. We are sitting on some across a few different currencies. Aussie wasn't one actually, that we are sitting on some relatively key support lines. I think Euro is the main one, but as you can see here, Kiwi sort of hitting that recent low down at 67. We're only like 10 points above, 10-15 points above that. Possibility of a bit of a break to the downside if we do break there, and you can see it a little bit more indicative of that sort of recent ranges we've seen there on the longer term daily chart. So sterling all the way back down just above 132, the figure having hit highs, as we know, sort of very close to 134, 133.75 really there. Recent lows, as you can see here, there's trend lines coming in around about 131.80. We've got previous lows just beneath that 131.70, and back here at the beginning of the month, he says, just stretching again to get that one out, 131.65. So you've got to say on that, break traders will be looking for a strong breakthrough 131.50, I would say, just to give it a little bit of air. Any of the bulls out there are probably looking to pick some up, not far from these levels really. Anywhere beneath 132, the figure I think would be value. But once again, if we do see the dollar start to accelerate, I think we'll see the break traders come in a little bit harder. Euro, this is very interesting setup. We are back on the year's lows, or not too far from them. So there they are down here, 111.80 odd. Once again, 112.52, so a little bit of work to do here, but those lines coming in very similar, both on the hourly chart, and this is that big daily one. It's bounced off here a few times, and I think a lot of traders are starting to look at that. Probably still sell the rallies trade for most of the bears out there, but a break trade here may be the way forward for some, especially if they think the Fed is going to be more hawkish, and we'll see the dollar as a bit of a safe haven trade. With this COVID variant really kicking in. Dollar yen squeezing into a bit of a range still, sitting around 113.50. Obviously a bit of resistance coming around about 114 the level, and we're quite far off those recent highs up near 115.50, but do keep an eye on that. Has been sort of, ever since it broke to the top side, outside the year's range before, we've sort of seen a decent bit of range trading in dollar yen, but possibly more to come there. And as you can see here, CAD well and truly on the back foot. Dollar CAD back up to 129.12. Another probably key resistance line, that is the high for the year, as you see, 129.35. So I think a break of 129.50 could see the dollar CAD, the loonie, off to the races. Dollar Swiss not mid-range, so it's interesting to see that we've got some currencies sitting on recent lows, and some sort of sitting middle of the range. So I think you can pick and choose as we go through the week, but certainly I'd be looking at euro, be looking at CAD, and maybe Kiwi as well. So certainly opportunities coming up, and we know the currencies will move. One of the reasons why CAD got such a bit of the dollar CAD got such a leg up is because oil did switch down here again. Obviously this Omicron variant leading to a little bit of selling, a little bit of bear pressure coming through, and we are at sub $70 a barrel back there. And once again, you know, for oil, I suppose we're looking at that sort of just north of $62 a barrel, a couple of levels there for maybe a break trade to the downside. So do keep an eye on that. And this is the reason why I think we're going to see a bit more volatility this week. Most people are looking for a little bit of an easy. You generally at Christmas and into the holidays, you're looking for a bit of range bound action. Sometimes you get the odd false breakout to the top side, but I don't think we're going to see that this year. Just unfortunately, due to the COVID spread, I think we're going to be trading sentiment. And obviously, as liquidity becomes more of a premium, then we might see some harder and faster moves. As you can see here, gold did break off those recent lows again, back up to sort of 1800, but keep an eye on that. That could start to gain again if safe haven plays come in. So I think normally this week you'd be expecting saying, look, range bound trades, not too much out to move us, but because of what's going on, because the pandemic's reared its ugly head again, and because it is starting to affect people, and people trying to travel, Christmas season, Christmas parties getting cancelled, all that sort of stuff will hit economies. I think we're going to be in for a little bit more of a volatile week ahead. So good luck with your trading this week. If you need anything from us at FP Markets, please do let us know, and we'll see you again tomorrow. Thank you very much.